Good afternoon. Welcome to the Brownfield Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Grebner. We had some technical difficulties as we got going today. With us, as always, to talk all things markets is University of Missouri's Scott Brown. Scott, we have a busy week ahead of us, and good to see you.
Good to see you as well, Megan. That's right. Lots of information for the markets to digest this week.
There is plenty for us to chat about. So let's get things started and recap what happened this week in the markets.
Yeah, on the cattle side this week, live cattle were $2.70 higher this week. Those feeder cattle auctions were anywhere from $1 to $3 higher on the week. On the futures side, the August live cattle futures contract closed up nearly $1, and the August feeder cattle futures contract was up $3.80. When you look at what happened to corn, the July corn futures contract was down 20 cents. Part of the reason why I think we got some stronger feeder cattle futures this week. On the beef side, lower beef prices, that choice box beef price down $16.75 this week. Ribs and loins were really leading that lower choice box beef price. On the hog side, another down week for hog markets. Cash barrel and gilt prices were down about $5.50 this week. The July lean hog futures contract closed down nearly $7.50. The pork cutout value is also down nearly $11. Ribs and bellies certainly led us to some lower pork cutout value numbers this week.
And not to mention, like, the fact that there was, it seems like a gazillion reports from USDA coming out. There was also conversations about potential legislations about cattle markets and what's been going on in them. So it's been very interesting to watch all of that play out as well. We're going to talk a little bit about weekly slaughter numbers. And for a while, we were talking so much about how numbers were significantly ahead of where we were a year ago. And that looks to have dropped off a little bit as we have head into the summer months.
That's right. For the week ending June 26, USDA is estimating a run of 661,000 head of cattle. That's 2,000 less than where we were a week ago, and that's 4,000 less than where we were a year ago at this time. And when you look at the year-to-date numbers, we're now talking about cattle slaughter that's 5.4% above year-ago levels. If you recall, just a few weeks ago, we were much higher than that in terms of the year-to-date numbers. On the hog side, kind of a similar story here, a run of 2.368 million head of hogs this week, according to USDA. That's down about 69,000 from where we were a week ago and down 258,000 from where we were a year ago. And the year-to-date numbers there now, pork slaughter or hog slaughter up only 0.9% year-to-date.
It definitely has been playing catch up, and it looks like we'll catch up sooner rather than later.
We certainly are talking about a very different supply situation, especially on the hog side, than we've seen for a while.
All right, let's get into the reports. Let's kick things off with cold storage, which was our first one this week.
Yeah, if we look at cold storage, by and large, we're seeing ending stocks that are flat to down on the beef side of the equation, down nearly 1% in terms of May ending stocks of beef relative to a year ago. Pork was down 3%, and the chicken side down 15%. You know, if you look at some of those individual components, we can talk about the bellies and butts on the pork side. Bellies down 40% below a year ago, butts down 35%. On the chicken side, although chicken wing stocks continue to run below year ago levels, they are beginning to catch up. And I think that's taken a little bit of the wind out of the sails of chicken wing prices over the last few weeks.
How much do we attribute that to restarting of restaurants, folks back in restaurants, bacon in restaurants, in that what's going on there as well?
So I think that's certainly part of the story that we have going on, Megan. You know, that demand slug, if you will, had to work its way through, and there was a pretty good pull for some of these things, like chicken wings as well. That as we've now gotten those pipelines maybe a little more full than they've been for a while, I think that is why we see some of the declines in some of these meat prices as we've looked over the last couple of weeks.
All right, let's talk livestock slaughter and some interesting figures in there. And I will note before we get started that we're actually comparing against 2019 because of how things looked a year ago with the pandemic.
Yeah, that's right. If we just start look at the May production numbers on the beef side, May of this year is down 5% relative to May of 2019. On the pork side, down 6.7% over that same comparison point, and chicken down 5.7%. And I think it's important to remind ourselves, you take all three of those meats, and May was down nearly 6%. So fewer supplies of beef, pork, and chicken, I think, has been helpful to the price side of the equation. If you look at year to date, all right, so May, again, down hard, but you look year to date relative to 2019, beef up 4.1%, pork up 3.3%, chicken up 2.2%. So a little different story on the year to date, but certainly some interesting numbers out of livestock slaughter.
Yesterday, hogs and pigs came out, and interesting as we take a look at those, especially as we note talking about supply and what's going on the hog side of things.
Yeah, that's right. I kind of start by going, you look at things like kept for breeding or market inventories, and those came in really close to pre-report estimates. Breeding inventory came in at 98.5 in the report that we got yesterday. However, when you look at what are some of the surprises or things we didn't do so well in terms of pre-report, to me, both pigs per litter, farrowing intentions, all were at the low end of the pre-report estimates. Pigs per litter for March through May was down 0.5%. The pre-report estimates would have actually had them up a little more than 0.5%. March through May farrowings came in at 97.4, so lower there. And intentions, the one to me that sometimes jumps out, June through August intentions at 95.6. If we follow through there, we're just going to continue to talk about, I think, fewer supplies of hogs as we look forward.
So let's talk a little bit about that as we look into, we typically talk about concerns about shackle space in the fourth quarter of the year. Does this alleviate some of those concerns as we look ahead and know that we've seen some pullback in specifically farrowing intentions?
Yeah, so I think absolutely, and I think we got ourselves, when you look at the history here for a minute, from about 2014 through 2020, we were doing nothing but growing sow inventory, growing farrowings, et cetera. As we entered 2020, we started that decline. We had at the end of 2019 about 6.47 million head of breeding inventory, and today we're at 6.2. We have not seen that kind of decline in a long, long time. So I think things are eased in terms of some of the concerns we might have had about things like shackle space.
Is there also potential for additional price support as we think about this moving ahead, knowing, and especially if our domestic demand remains strong, if our jobs see a boost and we see more income coming in, all of these things that are leading people to purchase more pork, and you look at the trade situation, and we know that U.S. pork continues to see some pretty strong demand on the global market.
So generally, I say yes to that question. Again, I've probably been slow on the supply side, not getting us tight enough relative to what we've been seeing of late in terms of the data. But demand domestically certainly has been good. International demand continues to be good. I think if you looked at the one cloud on the horizon, perhaps China's still that cloud from a hog perspective, or a pork trade perspective, I should say. We haven't seen pork exports to China where we were a year ago, and some of the recovery we're seeing there maybe suggests we don't get those back here as we go through the remainder of 2021. But generally, tighter supplies against a stronger demand. There's a reason why we've been running some pretty high hog prices. We have this conversation despite what's been a couple of 3 weeks of pretty tough hog prices. I just remind us, those are still historically at the high end of the range, not the highest, but certainly higher than we typically think about.
The other thing we've been hearing a lot about, and I'm going to kind of dovetail a little bit as we talk about this, is the line speed ruling. How much concern do we have about what this potentially does later in this year, I know we talked about maybe some alleviation of that Q4 pressure on shackle space, but as we look into 2022 and beyond, and what do we need to think about when it comes to this?
Yes, so I think this is a good discussion. I don't expect, given where we sit now in terms of this hogs and pigs report, to see much of an issue in terms of getting through this year with tight shackle space. So slowing line speed might mean less than we would have thought earlier, at least for this year. However, at some point we're going to build sow inventory back, and maybe the prices that we have today will make us do that by the time we get to the fourth quarter of 2022. I'll always say the day we need that additional shackle is the day we wish we would have, the industry will wish it had higher line speed. And so that day of reckoning comes. It may be postponed till 2022 or 2023. I still see the bottleneck of processing being an issue for the hog industry as we look ahead.
Anything else we need to touch on as it relates to hogs and pigs this week?
I think we covered a majority of it. Again, if you just look at where we've lost sows or breeding inventory over the last year, and I say this out loud just so we think about the report a little bit further. So North Carolina led the way, down 60,000 head, Missouri second, Iowa third, Ohio fourth. I'm again curious in some cases whether we've seen that kind of sow reduction. So I just want to keep it on the back burner of let's hope those farrowings and farrowing intentions come in where we see the report. But if we were on the high side of those when we finally get the real data, I wouldn't be completely surprised either.
As we round things out today, Scott, cattle on feed today came out, and let's talk a little bit about those numbers.
Yeah, so let's finish on some good news, right, out of that report. Placements in May came in at 93.1. That's right at near the bottom end of the pre-report range. So less placements, to me, that's a longer term positive for cattle prices. Now on feed, June 1 came in at 100.2, pretty close to the pre-report average, so not a big difference there. I just remind us that June 1 number, I believe, is the second highest in June since we started keeping these numbers. So although placements down, suggesting to me we get fewer cattle as we get into late 2021 and into 2022, yet today we still sit with feed yards that are fairly full.
How much are we watching the drought conditions in the far west, and then obviously in the Dakota areas and other parts of cattle country, and what this potentially signals in reports to come? Yeah,
so let's not lose sight of what's going on there. And again, for those that are dealing with the drought, it's tough, and I feel bad for the things they're going through right now. But to me, that is potentially the biggest thing that will move cattle prices as we get into 2023 or so, if that drought continues to unfold like it has been. It's early, and I think has really hurt pasture and hay conditions that are hard to recover at this point. So, I sat here and you and I had this conversation of Columbia, Missouri got in excess of 6 inches of rain last night. I sure wish we could have bottled some of that up and sent it to our friends in the West, but that's some pretty tough conditions, and maybe the biggest thing that we start talking about in terms of where cattle prices are as we get 18, 24 months down the road.
As I look at the hay report from South Dakota earlier today, prices are up. The tonnage, they're reporting losses in the second cutting 50%. How concerning is this, and how close does it potentially put us to starting to see additional liquidation in those areas?
Yeah, I think it's underway. Megan, when you look at the number of sales that we're now seeing of cows, I think there's a pretty strong demand. And And so I think it builds on itself. And again, I go, even in a perfect situation where those drought areas get rain today, tomorrow, it's kind of late in the season for growing more hay or growing more pasture. So I don't think we get that much recovery all that quickly. You got to get the fall to really maybe get some good growth trying to come back if you had adequate precipitation. So I think we're doing nothing but seeing more liquidation as we look ahead in those drought areas.
Scott, anything else this week? It is a full slate. It was a full slate for us.
I think we've covered the main things for this week. It certainly has given us, I think, a little more insight into both cattle and hog supplies as we get through the latter parts of 2021 here, and less supplies of hogs coming maybe as we finish the year, and then of course drought, I think, is the big one on the cattle side.
Scott, always good to see you as we look ahead to next week. It will definitely be interesting to watch. June acreage comes out Wednesday. So as we talk about the cattle markets and cattle prices specifically, to see that information as it relates to inputs. But what else are we watching for next week?
Yeah, so we also have Restaurant Performance Index midweek, and we'll finish next week with a jobs report. So some demand side information that we can talk about next week as well.
All right. Always good to see you. We will see you next Friday.
Sounds good, Megan.
Weber Weekly Livestock Market Update delivered to your email box every Saturday morning. Visit our website, brownfieldagnews.com. You can also submit questions and comments there. And for all of the great podcasts that Brownfield offers, go to brownfieldagnews.com/podcast. Have a great weekend. Happy first week of summer. I'm Megan Grebner for Brownfield.